Etsy Incorporation is the new market analysis. Etsy Incorporated is an American company that owns the e-commerce marketplace of the same name. Specifically, on the Etsy platform, you can find handmade or vintage items and handicrafts proposed directly by sellers in their personal windows. It is headquartered in New York and has 1,414 employees. Although we will classify it as a crowd commerce company, Etsy is perfectly suited to join Best Stocks 3.0 as a timely buying opportunity that you will not miss. While Amazon.com is the undisputed heavyweight of online shopping and eBay is the place to go for used things, Etsy stands for unique handmade products from thousands of artisans, as well as custom and vintage equipment. Etsy matches buyers who want exclusive items with the manufacturers of those items. It's a powerful market position to maintain, and as a one-stop shop for consumers looking for unique products, it offers something that no other online platform can reliably replicate. Etsy owns a specialized music sales platform, Reverb, which we will omit from this discussion. Etsy also offers an advertising platform for sellers, allowing them to promote their work on site, as well as through other internet properties such as Alphabet, Google, Facebook, Instagram, Pinterest, and Bing. Etsy's dataset and machine learning provide opportunities to optimize that channel as well, which means Etsy makes money not only by taking a portion of sales, but also by mediating advertising and increasing the revenue pool from which it's taking that share. What makes Etsy a good investment? In short, it has a hard-to-replicate audience and platform, and is growing rapidly and profitably. For a long time, Etsy was a great idea that didn't seem to live up to its potential. Things changed a couple of years ago, and until 2019 sales showed an impressive acceleration. Annual revenue more than doubled from 2016 to 2019, from $365 million to $818 million. It was nothing compared to the breakthrough year 2020 provided. Revenue more than doubled to $1.7 billion over 12 months, and net profit more than tripled. While Etsy got a huge boost from the mask sales needed for the pandemic, the more enduring shift to online shopping, initially spurred by the closures, has produced truly superb results. Etsy leveraged an energetic team of technicians and intelligent artificial intelligence, AI, to tweak its algorithms to do a better job of showing shoppers the items they'll love, which means better results for its passionate manufacturing base. Etsy grew by more than double the rate of e-commerce overall in 2020. It is also growing rapidly internationally, with gross sales of goods from the United States accounting for 40% of revenue in the last quarter of 2020. This was good for Etsy's stock price, but also for the company's sellers. On average, sellers increased their sales by more than 20%, which helps explain why the number of sellers on the platform increased by 64%. That wouldn't matter if buyers were scarce, but Etsy's growing brand recognition is only part of the success. Etsy's repeat buyers metric grew 157% during the last quarter of 2020. As any store owner will tell you, margins on repeat customers are much better than the margins on customers that you need to acquire with advertising. The proof is in margins, which continue to improve, with a gross margin of more than 73% and a free cash flow margin that has exceeded 35% for 2020. Financial data. The revenues of Etsy, Inc., grew by 110.86% in 2020 compared to 2019 to $1.73 billion. Net profit grew by 264.2% to €349.25 million. Risks and how Etsy could fall behind. Etsy faces the usual risks in online sales business, which means it depends on consumers' willingness to spend and faces intense competition. About a year ago, when stocks were tumbling because everyone was expecting a COVID-19 lockdown-induced and consumer-driven recession, Etsy was not spared. But the shopping is not over. It has moved online to an unprecedented level. At the same time, Etsy's core audience, the wealthy, continued to make money working remotely, and the need for masks overloaded Etsy as seamstresses produced millions. This may have pushed forward some of Etsy's future growth and potentially mean that the dizzying growth rates we've seen in 2020 will moderate, tightening Wall Street on equities. The other perennial risk is competition. Amazon would like to take care of Etsy's business as much as possible, but from our point of view, they are too different for this to matter much. Consumers looking for unique products are less likely to target the world's largest sellers of mass-produced Chinese goods, meaning eBay is also likely a minor threat than we might otherwise assume. If, on the other hand, individual manufacturers decide they want their own online stores, they have turnkey options like Shopify to consider. However, Etsy's improved performance came at the same time as Shopify's, so we don't think Shopify could compromise Etsy's growth or vice versa. Final thoughts. Because we expect Etsy to continue to thrive and be worth much more in the long run, we recommend buying this fantastic business now, even if prices seem high. The silly way to bet on potential world champions is not to wait for unpredictable entry points, because sometimes they never arrive, or you forget about the company and lose it when it arrives. It's taking an initial position, maybe a third of what you'd ultimately want to allocate, then staying on top of that investment. Moreover, although revenue growth is slowing around pre-pandemic levels, Etsy's efforts have not slowed. CEO Josh Silverman seems relentless in expanding the platform. Etsy is investing money by acquiring similar assets located around the world. Etsy bought Depop, a community-based marketplace to buy and sell unique fashion for $1.625 billion. Depop's revenue and gross merchandising sales, GMS, increased by more than 100% in 2020. In addition, about 90% of active Depop users are under the age of 26, giving Etsy considerable exposure to the Gen Z demographic. The purchase also expands Etsy's total addressable market in the fast-growing apparel industry. The second-hand market is expected to grow at a compound annual growth rate of 39% from 2019 to 2024, reaching $64 billion. But Etsy didn't stop there. Sometimes it is better to buy a competitor than to try to recreate your own business, especially in a new country with different regulatory regimes and social customs than your own domestic market. Etsy recently decided this with the purchase of Elo7. Among the top 10 e-commerce sites in Brazil, Elo7 is a private marketplace for unique, handmade items, much like Etsy itself. The purchase immediately expands Etsy's addressable market into a territory where it had no previous presence. Elo7 is considered a leader in customized and made-to-order merchandise in Brazil. The marketplace has 8 million items for sale, 1.9 million active buyers, and 56,000 active sellers. E-commerce in Brazil is expected to grow by 26% until 2024. If you don't own Etsy shares, we think this is a great time to buy them. I hope you liked the video. In that case, I invite you to subscribe and put a like to support the channel. Thanks for watching. See you in the next one.